Hello everyone and welcome to Good Morning Trading. I'm extremely happy to see you again. We're going to review the latest market news, and as I've been telling you for about 10 years now, this is a trader speaking to traders, since I've been trading for over 30 years. And above all, I'm a member of the CME and the Chicago CBOT with a seat, voting rights, and so on. There are about 10 of us private individuals in France. And even then, I don't know any of the other 9, so I have my doubts. On this quick global analysis, we're still dealing with the issues of the UIA and their profitability. We've seen another significant and powerful downward trend on the Nasdaq, which was impacted quite severely by the market shift, as you can clearly observe on the chart right here. Around 3:30 p.m., we were right at the middle and Saint-François, which was somewhat reassuring. Between 25,320 and 25,350. And we kept dropping until 7 p.m. non-stop. We broke through the 25,000 point mark, then after that, the 25,000 points were regained. We even climbed back up to 25,050, and then another wave of decline. So yesterday, I got involved on the rebound from 25,000 around 4 p.m., and then in 5 minutes, the day was over. After that, I didn't keep trading, I had just set an alert. I always have an alert set at the 750s, so basically every 750, 500, 250 and 1000 points, I set an alert. At the lowest, we went down to $24,783.50. So I wasn't notified. It was open at 6:50 p.m., so I wasn't notified at that time, just about 30 points off. And then the market started to rebound. And we're still in a bearish phase. The good news on the Nasdaq is that we can see it's come back into contact with its monthly support. It broke through, then re-entered, and all night it stayed nearby. And just below, in the morning, just above, we're around 25, 1,050. There might be some appetite to rebound. So the whole sector of technology-related stocks is being hit hard. It's turbulent. We've still got days like this ahead, right, guys? Software publishers like Datadog, for example, have taken a beating on the stock market and have once again suffered losses. I quote, "Investors fear that these groups may become obsolete in the face of the rapid rise of AI and could even become takeover targets." That means that for funds who say they're done for, they're going to start panicking, selling. They'll sell the shares for less than $100 a year, thinking they could even go as far as bankruptcy. Yes, the shares will collapse and we'll buy them back at $10 and pocket the gains. Sell at 100, buy at 10, we'll have pocketed 90 in value between the two. We're not there yet. We're not at the vulture fund stage, the predatory fund that rushes to sell off weak companies, but they have all the makings of a potential future victim. So, something to keep an eye on. And on the other hand, for example, we have Supermicrocomputer, which gained 13% because they announced revenue forecasts above expectations, notably due to strong demand for artificial intelligence servers. But this strong demand for artificial intelligence servers is also causing a drop for those who use them because it's getting more and more expensive. There's that, and there's also the competition. And here, we're not talking about investing $1 billion or even 10 billion. These are investment plans. At the minimum, we're talking about 100 billion, 200 billion, 300 billion over 1, 2, or 3 years. We've never seen this before in economic history. Not even in modern times, and really, not even in the history of humanity. So many massive investments in a single sector. As I was saying, we may be at the very beginning of the AI revolution, just like at the start of the Industrial Revolution. In a country like France, there were 40 to 50 car manufacturers. 100 years later, only 2 remain. So right now, there are a lot of contenders in AI, and a large number of them will probably disappear. It won't necessarily be the worst ones that disappear, but rather those with the least capital. And here we have to admit that Europe is starting off 10 kilometers behind in terms of capitalization. Because now it's going to take money, damn a lot of money, constantly pouring in money. A sector that's doing well, that's in good shape, we'll see it right away. So here we go, it's going to be the Dow Jones. So here we have our Nasdaq. Very clearly, it just keeps dropping for now. There's nothing holding it back. Right now, we're at the 25,000 mark. It's going to try to hold, but if 25,000 doesn't hold, we're on alert at 24,1750, and I'm hoping maybe for a buy at 24,1740, re-entering 750, maybe even 760, and that's it for the day. Thank you. Goodbye to the alert. Now we'll see if it sets in, if it consolidates. But in any case, they're reaching a level that's the lowest it's been in 2 months, which could at least allow for a pause here. For now, we're not sure that AI is profitable. There are doubts. Well, have we paid enough in 48 hours? The doubts, maybe. Here we've reached a level. Finally, this is the first support where we could at least hold on or limit a new wave of decline on the Nasdaq. The S&P 500, its little brother, just did a copy-paste for us. It too is at its lowest levels in 15 days, but it's nowhere near its lows from 2 months ago. You can really see the difference. It's the big, most highly capitalized stocks that are hit first, and since the S&P 500 is much broader, it's ultimately supported by the small caps in the S&P 500, like number 482, for example, which of course you know, right? You know all 500 stocks by heart, just like I do. Not at all. But there is one that's holding up well. We already talked about it 48 hours ago. It's the Dow Jones. When you have a lot of money to invest and you start having doubts about AI. Did you just inherit from Aunt Josephine? With $1 million, you couldn't put $1 million into Bitcoin or Nvidia or Microsoft or Tesla. Those move way too much, so let's go for something safe. Let's go for the Dow Jones and look at the Dow Jones. Unlike all the tech stocks, it's kind of making a comeback. It's the comeback of the old economy, of the old industry. It's at its highest in 15 days and at its highest in 2 months. So all of Angenine's money, which we couldn't invest elsewhere, is better off going into something safe, something traditional like McDonald's. We're going to encourage obesity, BMI 36 in my case, but I'm fighting it. Maybe one day I'll tell you about my struggle with obesity. By the way, yes, I'm going on a diet, so shorts and all those cereal bars and chocolate bars, it's a disaster. In Andorra, they're going to lose 12 to 13% of their sales, especially for things like Snickers, Mars, and the like. It's over. It's been 48 hours since I quit sugar, and it's terrible. It's hard. It's almost all I can think about, but I'm holding on. At least I've made it 2 days, which is already my record for the past few years. So, Dow Jones, everything's fine. Everything's fine. Everything's fine. If you have Aunt Janine's money right now in the short term, put it on the Dow Jones rather than the Nasdaq. Where you absolutely shouldn't put any money is Bitcoin. Look, day after day, it held at 75,000, tried to bounce, held at 72,500, tried to bounce. Now it's at 70,165 at its lowest, 70,700. What's worrying is that overnight, it didn't even try to bounce, didn't even try. 70,000 is still a good level to stop a drop, but given how Bitcoin has looked for the past 2 months, if it breaks 70,000, the next support is much lower, much lower. We're looking at 66,000 at best, with a really huge support that could hold it. So we'll see, but now is not the time to put money into Bitcoin. We'll talk about 100,000 later, and as for 1 million, that's for another time. I'm not even going to talk to you about it. Bitcoin is the product that's there to make the middle class dream. So I totally come from that background. I'm actually from the lower middle class, somewhere between workers and the middle class. It was made to make people dream. You put in 1,000 euros, close your eyes, open them again, and you're a millionaire without having done anything. Unfortunately, life is a lot more complicated than that. You have to work to earn money. I know, it's a shock for many people, especially those under 25. It's a huge shock. But yeah, you're going to have to work 10, 12, 15 hours a day if you really want to make a lot of money. Otherwise, you become a civil servant and you'll never keep a lot of money. But you can complain your whole life because you don't earn enough. Yes, but at the same time, you made a choice at some point. I'm a former civil servant who resigned. That's why I'm telling you this. Gold, with its little rebound here, hasn't quite retraced everything. 50%. It must have retraced about 40% of its drop. It's still showing a bit of weakness. So be careful. As long as gold is below 5,000, it's not a great sign. It could come back to around 4,700 or 4,750. Be careful. Right now it's at 4,926. It's really an awkward level because it's below its monthly pivot point, so that's a sign of weakness. If it were above, that would be fine. It could use it as support. But right now it's below, so this monthly pivot, it's more likely to act as resistance rather than support, so there's a slightly negative bias on gold. We'll finish with the indices. For the European indices, let's move on to the Indian DAX. It's in the middle of the range, around 24,700. It made a small move up above 25,000. It couldn't hold that level. So that's a major signal. If we come back into contact with 25,000, technically it's going to be a bit tricky today, at least if we get back to 25,000. Be careful, don't start buying above 25,000. There is a very good chance that you will get hit again, just like what happened on Monday, I think, and also like on Tuesday and just like yesterday. And then, well, we have to consider the CAC 40. It's accelerating, it's picking up speed. It's fallen so low that now it's in an acceleration phase. It should drop slightly. Maybe it'll come back to around 8,250 at the open, since it's the only index that's not open yet. Right now, all the global indices are open except for the CAC 40. Let me remind you, it's on a 35-hour work week, so it only starts working at 8 a.m. While all the other indices have already started working, they've already put in 8 hours of work. There you go, it's a perfect symbol. I think it's the country with the lowest annualized working hours among all OECD countries. We work the least, we have the most vacation, we're on a 35-hour work week, and we retire 4 or 5 years earlier than others. So in the end, it's no wonder we have a little less money. Well, I'll let you think about that. This was a message from the French Liberal Party. So in any case, it's stuck at the monthly middle era, which might be hard for the CAC 40 to break through. If the United States doesn't rebound, the Nasdaq would need to rebound and the S&P 500 would need to rebound. Now they can do it with strength. And if it rebounds strongly, the CAC 40 will be able to push itself above the monthly middle era and for it to become a support there. For now it's on it, but it doesn't really know what to do next. I think it's going to wait and see what the big American brothers do in a few hours. So that's basically what I wanted to tell you. No, I still have more things to tell you. Great, hold on, I'm just trying to get my bearings here. There we go, multi-camera. Hello everyone. A quick important message. On Friday we traditionally have the monthly US government employment report. It's one of the major statistics we get at this time. However, it was supposed to be this Friday, but just know that it's been postponed to February 11th. That's important. Make a note of it because it's really a statistic that causes a lot of movement. And now it's going to be on February 11th. So I'm checking quickly. It's a Wednesday, so that's something unexpected. Wednesday, 2:30 p.m. French time, things are going to move a lot. Why? Because they had a 4-day shutdown of the federal administration. They sent all the government employees home for 4 days. They didn't pay them. Because in the United States, if you don't work, you don't get paid. So that pushes things back by 4 days, even if it's probably ready. But anyway, they want to show they're not happy. So we're going to get this monthly employment report from the US government on Wednesday. Make a note of it right away. Wednesday at 2:30 p.m. It will be exactly the 11th. February in the year of our Lord 2026. things will move, and that Friday, well, it's going to be quiet because they're at home. There you go. Maybe time to push up Coca-Cola stock or MCDO. With that, I send you my best. Take care of yourselves, eat less sugar. It's very hard, but we can manage it for at least 48 hours. We'll see. If I make it through today, if I'm talking to you about it, it's because it's not going so well, honestly. Alright, with that, I send you my best. Ciao, see you tomorrow. And now I'm switching over for the people from my school. See you soon. Right away, there you go. Kisses.